Vivek in just a bit to talk about more Midcaps, but in the meanwhile, let me invite Sameet Chavan, the technical analyst of Angel One, for a technical check on the market. Sameet, does it make sense to take a call on the Nifty right now because the year-end phenomena is playing out? Things are, on the lighter side in terms of volumes. What's the direction that you expect the Nifty to take?
Good afternoon. See, market, seems to be in a consolidation mode after, 2 days of sharp recovery from the lower levels. Now, with, last 2 days of price movement, it appears that 17,700, 17,800 has become a sacrosanct support zone. And till the time we remains, above this, there is no real reason to worry for. But on the higher side, the momentum is clearly lacking in key indices. So as far as Nifty is concerned, 17,200, 300 seems to be a strong, 18,300 seems to be a strong resistance for this expiry itself. So as of now, there are no indications whether we'll surpass 18,300 by tomorrow itself. Overall, we believe that the trend is likely to be on the higher side, but for next couple of days, we are likely to see consolidation. The consolidation could be in the range of 250, 300 point for Nifty, and for Bank Nifty, it would be around 500 to 700 point. So range bound activity is likely to continue within the indices. But yes, as you just pointed out, the stock specific traction is quite good, and hence it's better to focus on individual stocks that are clearly providing better trading opportunities.
So what would your individual technical bets be in that case, Sameet?
See, most of the beaten down counters are now, giving some sort of recovery. If you look at the Tata Chemicals, the stock has already corrected more than, 25% in last couple of months. Stock has managed to find support around its, key moving averages on weekly and monthly time frame chart. So 870, 880 seems to be very strong support, and stock has already rebounded from those levels. But the kind of price action that we are witnessing today, stock has already pierced its 5-day moving average, which is the, early sign of revival. So at least with a short-term perspective, we expect this trading bounce to continue. 955, 960, these are the next levels to watch out for as far as Tata Chemicals is concerned. And as a trader, one can keep a stop somewhere around 918. The second buy would be, from the two-wheeler space, TVS Motors, which has been one of the rank outperformers within this space. Stock didn't, participate in this recent correction. In fact, went through a long consolidation phase. And since, in last couple of days, we are seeing good traction. Stock is on the verge of a breakout and is likely to come out of its recent congestion phase. If you look at the volume activity, it has picked up substantially, and hence we expect the stock to move beyond 1100. 1120 as a momentum trader, one can clearly eye on. And, as a stop loss level, one can now put a stop loss somewhere around 1060.
Okay, thank you very much for that. Let's get to our segment, Midcap Movers. Vivek is here to take us through the midcaps that are moving.